Very good afternoon to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I welcome you all in today's 109th CP program organized by AASB of ICI this year. Today, this would be our 109th CP program in the form of webinar. We have organized various webinars as well as seminars and conferences also during this council year. And as we all are aware that we have already covered all the standards on auditing, we have covered all the line items of balance sheet, asset side as well as the liability side, various audit consideration while auditing the asset side of the balance sheet as well as the liability side of the balance sheet, as well as we have covered cargo and schedule 3 also. And now various important aspects of the auditing now we have already started. Recently, we have already started various industry-wise audit consideration also. And today the topic is again very important and very relevant. That is the reports or certificates for special purposes. And in order to cater this important topic, we are having with us our own chartered accountant from our chartered accountant fraternity, very learned speaker, CA Gaurav Gupta ji. So on behalf of AASB of ICI, I extend my warm welcome to CA Gaurav Gupta ji on this 109 CP program organized by AASB of ICI. Welcome to you, Gaurav Gupta ji.
Thank you so much, sir.
And as the topic is very important, very relevant, and very important for all of us, and as Honorable Chairman Sir and Vice Chairman Sir has stuck up in one of the important meetings, so we are taking liberty to start this webinar on time. And before we formally start, it is my proud privilege to share with all of you the brief profile of our today's learned speaker, C. Gaurav Gupta ji. C. Gaurav Gupta ji is a BCom honors from Delhi University and qualified in May 2006. He has served the audit profession since then, and he has experiencing of handling multi-gap arrangements and audited large companies in diverse sectors like real estate sector, retail, auto, power and utilities, hospitality, and various consumer products, etc. So list is very vast, but time is less. So we would like to have his expert opinion, expert knowledge on this important topic, that is the reports or certificates for special purposes. So without wasting much more time, I request C. Gaurav Gupta ji to please start his deliberation and enlighten all of us on various aspects of reports and certificates for special purposes. Over to Gaurav Gupta ji, please.
Thank you so much, Anilji, for this opportunity. And I really welcome everybody, though I cannot see anyone, but I really welcome everyone to this seminar. I'll just probably share my screen to start with, and we'll start off with the discussion. So I hope my screen is visible.
Yes, sir. Yes, sir.
Yeah. So let us just start with the fact that what do we mean by reports or certificates for special purposes, right? And to start with, I would just like to maybe explain as to what are these reports or certificates as far as this guidance note is applicable. So these reports essentially means that certificates and reports issued by a practitioner as a result of assurance engagement, and it covers all assurance engagements, other assurance engagements which are not covered or which are other than the audits and review engagements which are covered by other auditing standards such as SA 700 or SRE 2410. Right, and we'll kind of discuss as to what are the applicable, what all does this guidance note kind of covers and what it does not cover. Now, the very relevant question here was, why was this guidance note really needed? And since these are assurance engagements, those could have been covered by other auditing standards. But as far as if you really see, as the time has progressed, economic activity has increased, and the trust on profession, our profession has significantly enhanced in the eyes of the regulators and authorities. So what they are also wanting is, a lot of times management is kind of, companies are submitting a lot of financial information to these regulators, for various aspects, for example, tenders, for, granting subsidies, for getting tax benefits, and, various other aspects, such as listing on stock exchanges, etc., etc. And these regulators are really putting that onus on the management to get those, kind of items certified from the chartered accountants as well. because that gives them a level of comfort, that chartered accountant has really seen that information which has been submitted to the to these regulators. Now, in view of this, again, onus has increased over a period of time, and there are a lot of challenges, that a practitioner would face while doing these kind of certificates and reports over a period of time. So there is also an expectation from the practitioner, out of the regulators and the users of these certificates, that any information that a chartered accountant is providing, that's kind of true and correct. And as we know, as practitioners, as auditors, that it is next to impossible to reduce our engagement risk to zero in view of the inherent limitations of an insurance engagement, because of the procedures, because of the underlying data that we kind of audit and review, and various other aspects. So this guidance note really helps practitioners in overcoming these challenges. It gives guidance to our practitioners, as to what they can do, what they cannot do, and when they are issuing a report, right? It is in what framework, and how the user of the report or certificate should really look at it and comprehend it and read it, so that he can take an informed decision, while the practitioner can perform his duties to the best possible manner in a compliant manner. So that's pretty much the context of this guidance notes and reports or certificates that we kind of issue for special purposes. So I'll just maybe keep on pausing, so that the audience can maybe digest a particular slide or the context that we are talking. Now, moving on to the fact, the various situations where a report or certificate is required to be issued, by a practitioner. Some of the examples in my experience, I've tried to list down here, but I think I'm sure all of you all would have seen much more difficult situations, or you would have seen many more situations, or the needs of the intended users, of the management of the company, where they would have asked various type of certificates from you, various types of reports from you. So few examples where typically I have seen reports or certificates being issued is, for example, the financial information such as net worth, turnover, working capital. These are required by various organizations for submitting various documents to the tendering authorities for getting tenders. A usual one is, the annual activity certificate relating to India branch office or liaison office of a foreign company, which is typically required to be submitted, to RBI as per the underlying regulations. Again, from SEBI perspective, which is again a very important regulator, there are various certificates that are required under the SEBI LODR requirements. For example, if you've raised funds, they would typically ask for a certificate for utilization of funds. Recently, they've revised guidelines for debt listed companies, where they ask for asset coverage, certificates in case of a debt listed entities. So on and so forth. So there are many other certificates which are again required by SEBI LODR. Whenever a company is going for listing, there are so many certificates that are required to be submitted. In terms of various state authorities, they kind of come up with the various subsidy schemes, right? So for example, they could ask you to invest in the particular state or in a particular area, and then based on a certificate from a chartered accountant, they would usually allow you a subsidy kind of a thing. So again, those certificates are again required by various regulators. There are other laws also, various laws where various type of certificates are again required. Those are written in the regulations. Under tax, there are various certificates that are required to be issued by practitioners. There are other authorities. For example, I could think of maybe RERA laws recently. They've started asking for CA certificates or a statutory auditor certificate in various for annual activities. So again, the onus is kind of increasing, day by day. More and more regulatory authorities, more and more regulators, more and more, the authorities or the user of, certain information from the management. They're again asking for a certification or a report from the auditors, so that they can be rest assured that whatever information that is coming from management, and that information is kind of true, fair, correct, and whether we can say that it is correct, true and correct, is something we'll kind of discuss in few more slides going forward. But I think the idea is that as the requirement to issue these certificates are increasing day by day, we as practitioners need to be very comfortable of what we are kind of doing and what we are issuing. We should know as to what risk we are taking, right? What is the framework in which we are kind of issuing these certificates, and whether that suffice the purpose for which these certificates are being issued, and these certificates are not kind of misunderstood by the users of the certificate. When we are certifying, saying say for example, the net worth of the company is rupees so much, so whether we are kind of certifying that all assets and liabilities have been accurately recorded, recoverability has been tested, or we are only saying that the net worth of the company as per the last audited financial statement is so and so, and you're not taking kind of onus on the asset recoverability, or ensuring that all the liabilities have been kind of recorded. So that's a very important distinction that we have to make as practitioners while we are issuing certificates, and ensuring that what we are issuing is kind of making sense, and it serves the purpose for which it is being issued. So I think these are various situations. I'm sure you would have seen many more situations where you would have typically issued certificates. Moving on, you know, why so again, as we understand that these certificates are required, so who is really asking for these certificates? It's really the government may ask for these certificates. There could be many regulators who are asking for these reports or certificates. Again, even the management, or those charged with governance, which is board or the audit committee, they may require some sort of certifications from the practitioners to really fulfill some contractual obligations that they're kind of entered with other parties, for example vendors, for example shareholders, and they might have committed to them that they would be providing certain information on a quarterly basis, on a monthly basis, and that is where they may ask for certificates or reports from the auditors. Again, going back to various laws and regulations or contractual arrangements, where the law or the regulator or the parties to the contract really want to use words like certify or true and correct to indicate absolute level of assurance. So obviously when they are getting a certificate, probably they want to probably understand and have a comfort that that's completely true and correct, whatever the information a chartered accountant or a practitioner has kind of signed off. But one has to really beware of the fact that it can't be reduced to zero. Engagement risk cannot be reduced to zero. So the guidance note also very clearly states that a practitioner is also not expected to reduce the engagement risk to zero, because of the inherent limitation attached to the various procedures that he's performing to kind of providing an assurance to the user of certificates or a report. So again, that's expectation, at least from a guidance note perspective, is not there, that you should be able to reduce the engagement risk to zero. Just like any other assurance engagement that we kind of do. Whenever we are using terms like report, certificates, that indicates that it is an assurance report and that has been issued in compliance with this guidance note. And we will see the contours of this guidance note, what is required, what is not required, what should be the form and content of the report. So but the context is that if you're using those words like report and certificate, that clearly indicates that it is an assurance report that is in compliance with this particular guidance note. And certificate really normally can be associated with a reasonable assurance. And what is reasonable assurance is something we'll again cover in few subsequent slides. We'll understand as to what kind of assurances we can probably provide in through this guidance note. Then coming back, as soon as a regulator, or as soon as the management, or as soon as those charged with governance kind of ask for a report or a certificate from us as practitioners, there are various questions that comes to our mind, at least my mind. Whenever somebody calls me to give me a certificate, these are the questions that comes to my mind as to what should be the content of my report. So one typical way or very simple way of writing a certificate is saying that, to whomsoever it may concern, the net worth of the company is so much, right? But whether that is sufficient, whether that is not sufficient, what should be the content of my report? What are the other things that my certificate should contain, for ensuring that the user of the certificate knows as to what I have done and what is the basis of my conclusion. Right. The other thing is, whether user of the certificate or a report will be able to clearly understand the responsibilities that I do versus the responsibility that management has to do. So how do I kind of bring it up in my report or a certificate? That's other thing, which is very important, for a practitioner to have a question in mind as to how do I bring that, to make sure that the user of the certificate clearly understands what I have done and what management has done. The other question again, comes in mind is whether I can use materiality. The answer is, of course, I can use materiality, but what are the aspects I should consider, while computing materiality? What are the qualitative as well as quantitative aspects that I should be considering while I compute a materiality and use it for performance of my procedures, right? Again, whenever a regulator or management asks for a certificate, the other question that comes to the mind is, how do I accept the engagement, or how do I continue with the engagement? What are the terms of agreement, that should be there in a typical scenario of while I issue a report or a certificate. Now, again, as any other assurance engagement, I should be able to answer a question that as to what procedures that I need to perform to meet the objective of the engagement, and the fact that it suffice the requirement of the user. So I need to decide on the nature, timing, and extent of the procedure that I should be doing, and how do I really bring that into my report as well, so that the other person using the certificate is assured that basis these procedures is how the conclusion has been drawn by the practitioner, rather than a blanket conclusion where practitioner is saying that everything is fine and there is no problem. Now, a typical scenario is where guidance note prescribes a particular format of the report, whereas the law or the regulator prescribes their own kind of format to be issued by the chartered accountant, which is more plain vanilla from their perspective, saying that everything is fine, the net worth of the company is this. But that does that really suffice? The answer is, of course, no. There are several aspects which needs to be brought into the report or a certificate that a practitioner is issuing, despite the fact that regulator may have prescribed a particular format for the report. The other thing is, the nature of the opinion or conclusion that we are trying to kind of draw. Again, as I said, there are two forms of opinion which are allowed under the guidance note. One is reasonable, the other one is limited assurance. Reasonable is more positive, while the limited assurance is more a negative form of opinion or a conclusion that we kind of give in the report. And we'll discuss that in detail as to what are the difference between the two in subsequent slides. Now, there are situations that also come when the practitioner is not able to kind of obtain sufficient appropriate evidence to conclude and issue a report or a certificate. Now what he should be doing if he's not able to kind of get that sufficient appropriate evidence. I think those are the situations, again, those are covered under the guidance note, and we'll kind of again uh, have those answers in subsequent slides. Now, the other question, very important one, is what if the opinion and the basis of conclusion which is drawn by the practitioner is kind of misunderstood by the user of the report? And I'm again taking a very plain vanilla example again and again, where you are certifying the net worth of the company is rupees 100, versus your conclusion that the net worth has been accurately extracted from the audited financial statements. Now, these two may look very similar, but in the first scenario where you are only saying that probably the net worth of the company is this, so the user of the report or certificate does not understand whether you have actually reviewed, audited, or you are giving an assurance even on the recoverability of all the assets of the company which form part of the net worth. Whereas whenever you are issuing a certificate saying that net worth is accurately extracted from the last audited financial statements, that's something, a very different type of assurance that you're kind of giving, that this audit was obviously done by me or by somebody else, but then it is as per the last audited financial statements, and I may not have done the procedures to kind of verify whether those assets are recoverable, liabilities have been accurately recorded, and so on and so forth. So that's the key difference, or that's the typical context where a practitioner should be very careful of while issuing any certificate as to what he's kind of certifying, and whether it is appropriate for him to kind of certify those things. I think these are some of the questions that typically come to my mind whenever I'm asked to kind of perform procedures on a certificate. And I'm sure there could be many other questions that would come to your mind, but I think most of those questions, I can assure you that this guidance note on reports and certificates for special purpose kind of takes care of, and very little is less left to your judgment, in terms of, obviously you apply your judgments, but those situations are at least covered in the guidance note, where you could be in dilemma as to whether you can kind of issue a particular type of report or a certificate. So I think whenever my suggestion would be that whenever we are doing this type of an engagement, just make sure that you've again read through the guidance note, made sure that the applicable guidance and applicable requirements of those guidance notes have been taken care of. That would help you kind of mitigate your audit risk and risk in terms of issuing that certificate to whichever regulator. So moving on, again, what does this guidance note covers and what it does not. So typically this guidance note covers, assurance engagements other than the audits and reviews of historical financial information, which are typically covered by other auditing standards, which is, say SAS 700 or SRE 2410 and so on and so forth. So again, it covers assurance engagements. So that's the important word, because engagement has to be an assurance engagement, and that is not audit or review or historical financial information, which is obviously covered by other auditing standards. Guidance note, again, can be applied to reports or certificates related to historical non-financial information as well. Right. So typically we as practitioners are used to giving certificates for financial information, but this particular type of guidance note also allows, in some cases, obviously, that historical non-financial information may also be possible to be certified or reported by the practitioner. But obviously, one has to really see what kind of procedures one can do to certify or report on those non-financial measures, which the management or a regulator may ask you to do so. Again, as far as this guidance note is concerned, as I've been speaking, the important difference between what type of an assurance that you kind of provide to the intended user is in the form of a reasonable assurance or a limited assurance. In a typical audit engagement or a review engagement, there are auditing standards which prescribe the language and the level of assurance that you're kind of giving to the user of those financial information. Similarly, here also there are two types of assurances that is allowed to be kind of provided by the practitioner. One is a limited assurance, and the other one is the reasonable assurance. And we'll kind of again discuss the important differences between a reasonable and a limited assurance conclusion. So what the guidance note does not cover, again, the engagements which are covered by other specific standards, including, review and audit of historical financial information, just like SA 700, SRE 2410. It also, as I again, told you in the last slide, that, the keyword is an assurance engagement, and we as practitioners don't perform all engagements which are only assurance engagements, right? So there are engagements which are not assurance engagements, right? And those are covered by some standards, or they may not be covered by the other standards. So one of them is, for example, standards SRS, on agreed upon procedures. Again, it's more of a, it's agreed upon procedure is an engagement where you don't give a conclusion, right? It's only a fact finding. So you may perform a procedures of comparing, A to B, and that's it. So you don't provide an opinion whether it is correct or it is not correct. So those are the engagements where separate auditing standards have been issued, and those are applicable on those type of engagements rather than this one. So this one is applicable only where you are doing an assurance engagement and you are required to perform an opinion or a conclusion basis the procedure that you have kind of done. Again, you would be doing preparation of tax returns where no assurance opinion conclusion is expressed. Again, this particular guidance note is not applicable in that scenario. You may be doing a lot of consulting, advisory work, tax consulting, internal audits. So again, those engagements are not covered as part of this guidance note. So it only covers those assurance engagements of historical financial or non-financial information, right? Where a practitioner is supposed to issue a reasonable assurance or a limited assurance kind of a opinion or a conclusion for the user of that report or certificate. Moving on, as I was speaking in last few slides, and that we'll discuss the difference between a reasonable assurance and a limited assurance conclusion or an opinion. I think that this is the most important part of the basis or forming an opinion while you are issuing a certificate or a report, right? Typically in audit engagements, you would give a true and fair view, and you stop there. In a limited review kind of an engagement, you would caveat your procedure saying that you would have done only analytical procedures, etc., right? So as far as this guidance note is concerned, it understands that there may be many scenarios where a particular typical single type of an assurance may not be possible for you to kind of draw. So again, depending on the nature, timing, and extent of the procedures that you can perform on a particular subject matter will actually decide what type of an assurance you can provide to the user of this report or a certificate. So reasonable assurance is an engagement or the level of assurance that you kind of drive for this engagement is where you can actually reduce your engagement risk to an acceptably low level basis the procedures that you have performed, and basis the underlying records and data that was available to you to form an opinion on a particular subject matter. While in a limited assurance engagement also, you tend to reduce your risk to a acceptably low level, but then that risk you are not able to kind of mitigate, and the risk is greater than a reasonable assurance engagement. So again, it's more principle based rather than how do I really conclude whether I've been able to accept it to acceptably low level, or the risk that a practitioner is taking is more than for a reasonable assurance engagement. So that would really depend on professional judgment, including what type of procedures you have been able to perform, what was the subject matter on which you were doing procedures, and also the underlying data typically, if the underlying data is probably audited, and that too by yourself, so maybe it may be possible for you to kind of give an reasonable assurance. Whereas, if those underlying data or the financial statements are unaudited, right? So you may be able to do similar type of procedures whenever you are doing a reasonable assurance or limited assurance engagement. So for example, again, I will go back to my simple example of net worth. So if the financials were audited by you, right, and you are able to give an assurance by tracing the net worth of the company from those audited financial statements, so it would be possible for you to kind of give an reasonable assurance conclusion, because you yourself have done the audit, and you know that you have reduced your risk to an acceptably low level. But on the other side, in limited assurance engagement, where the financial statements are not unaudited, those are only management certified financial statements, or some other chartered accountant or a practitioner has kind of audited those financial statements. So whether whether you are able to kind of reduce that risk to such an acceptable level that it is not greater than a reasonable assurance engagement, that is where the whole distinction will come, whether you can provide a reasonable assurance or you can provide a limited assurance. In a reasonable assurance, the the conclusion or the opinion that we kind of issue is called an opinion, and it would typically be a fact that whether you have been able to perform all the procedures, and whether the subject matter of examination is materially misstated. So you give a positive kind of affirmation that things are accurate, things are complied with. And I have put that example on this slide as well. The last column, if you really see, the example is, in our opinion, the entity has complied in all material respect with XYZ law. So you're giving a positive confirmation. Whereas on the other hand, if you really see a limited assurance engagement, it's more a negative statement, or a negative assurance, saying that nothing has come to my attention that causes me to believe that subject matter is materially misstated. So nothing has come to your attention that causes you to believe that the information that is being provided may be materially misstated. And again, you call that a conclusion when you are writing your report. Whenever you are giving a limited assurance opinion, make sure that the word on top of your opinion is conclusion and not opinion, whenever you are issuing a limited assurance report. And again, you could see an example as to how you form your language in terms of English or writing, the fact that you are comfortable or not comfortable. So the example says, based on the procedures performed and evidence obtained, nothing has come to our attention that causes us to believe that the entity has not complied in all material respects with XYZ law. So if you really see the last column, you will see the difference in as to how you kind of form your opinion and write it in your report. So on one side, you are saying, I'm comfortable, company has complied with, or the entity has complied in all material respect with XYZ law. Whereas on the other hand, you are saying that nothing causes me to believe that they may not have uh, complied with the relevant law. So again, that's a major difference between a reasonable assurance and a limited assurance. And every practitioner, while taking up that kind of an engagement, should really undertake a careful evaluation of the scope of engagement, the underlying data that he would get, the type of opinion that he might have to issue or he could issue, considering the nature, timing, extent of the procedure, the underlying data, etc., etc., and really, be able to kind of at the beginning of the engagement itself, should be able to conclude and discuss with the relevant entity that this is the type of assurance that you would be able to provide, considering the circumstances in hand. So I'll move on. Now we kind of deep dive into each aspect of the guidance note, which kind of covers all the relevant questions that we have kind of discussed in the previous slides. First one is, let's have an understanding of the objective of an assurance engagement. So any assurance engagement, each and every assurance engagement demands, us as practitioners to be able to obtain sufficient appropriate evidence, right? As far as this guidance note is concerned, it says that, again, you need to be able to obtain reasonable or a limited assurance as appropriate, depending on the circumstances, and about the subject matter. For example, you are certifying net worth, to ensure or give an assurance in the form of reasonable or a limited assurance, that the information that is being offered or that is being presented to the user of the certificate is free of material misstatement. Once you've done that, you've kind of obtained that assurance, be it reasonable or limited assurance. Your duty would be to kind of express an opinion in writing, whether in the form of limited assurance or in the form of a reasonable assurance, as to your outcome of the procedures that you have kind of performed on the subject matter. And remember, again, it has to be a written report that you kind of provide to the management or to the regulator. Again, a particular report or a subject matter, or a certificate that you are required to issue may include a number of aspects, right? There could be 3, 4, 5 aspects for which you kind of provide a conclusion or a report, and within that report there could be a number of aspects. So one could do a separate opinion for each of those aspects, right? Or provide a separate conclusion for each of those aspects. So both options are available, but really depend on the circumstances of a particular scenario, whether you want to do a separate opinion for each of those aspects, or you want to do it in a single report and have different conclusions for different aspects, which you are required to certify. A situation, again, typically should not happen, but then if it does so happen, when you're not able to, when reasonable assurance limited as appropriate cannot be obtained, you may have to issue a qualified opinion, just like any other assurance engagement. When you're not able to form an opinion, or you believe that something is misstated, you issue a qualified opinion or a conclusion in the report. And again, if the information is not available, in the complete form, is insufficient and not proper, and there are, again, there may be limitations imposed by the entity or the organization or the management, basis which you're not able to kind of conclude your procedures, you may want to kind of disclaim an opinion, which is again very similar to any other assurance engagement. Or in very rare or remote circumstances where it is impossible to kind of even disclaim the opinion, you may want to kind of withdraw or resign from the engagement. So again, these are the objectives of any assurance engagements. It's more reiterating that what all objectives you should keep in mind whenever you are doing an assurance engagement, and typically or particularly doing a certificate or a report kind of engagement under this particular guidance note. Now, once we understand the objective of an engagement, right? Whenever we are called upon to kind of issue a certificate, in our mind, we kind of recapitulate all the objectives of any assurance engagement, and particularly the objectives of a report or a certificate. And once we are clear that what are the objectives of the engagement, so some of those questions should help you answer whether you should be able to accept or continue with that particular type of an assurance engagement. So once you're again satisfied that you'll be able to achieve the objective, as we discussed in the previous slide, that you'll be able to achieve those objectives of the assurance engagement, I think that is where you could decide to accept or continue with the engagement. Apart from that, as practitioners, again, it's all of these items are more reiterating, from any other assurance engagement, but whenever you are accepting engagement for a report or a certificate, you should also always ensure that independence is something which is paramount and it is not getting breached. So you're not providing a certificate, which may be considered as a breach of independence, for yourself. Again, whether the engagement team that will work on that particular engagement has appropriate capabilities and competencies to kind of deliver the engagement, certify the subject matter in hand. For example, if the entity requires you to kind of certify, say, the capacity of the plant, I don't know, my engagement team may or may not have those capabilities and competencies to really establish that subject matter. So one really has to evaluate the subject matter, the scope of engagement, and then the team on hand, and whether that team should be able to do those procedures and come to a reasonable or a limited level of assurance for the user of the report or certificate. Again, you again confirm your understanding once you have decided on the procedures that you kind of want to do, and then this level of assurance that you can provide. Then you go back to the entity. You also kind of ensure that the understanding between the practitioner and the engagement party for regarding the terms of engagement, the type of reports, etc., etc. Those are on common page. So there is no mismatch between what you understand is something that you have to give, while the engaging entity or the organization understands it in a very different manner. There are other preconditions of assurance engagement which should be satisfied before you kind of accept or continue with the relevant engagement. The fact that the roles and responsibility of the appropriate parties are suitable in those circumstances. Again, what is that you have to do and what is that the management has to do. Are those responsibilities clearly demarcated, right, in terms of preparing the underlying document versus verifying the subject matter with those underlying documents. I think those responsibilities are clearly demarcated between yourselves and the engaging party. Again, the underlying subject is appropriate. What does it mean? So again, there may be a subject matter which as practitioner it is impossible for you to kind of certify, and that is where you might have to kind of put your foot down, saying that whether I can do, whether that subject matter is in your purview in terms of your competence, in terms of whether the institute allows you to kind of opine on such a subject matter. I think that precondition is important to evaluate for before you deep dive into any engagement. Again, you need to also see, while subject matter is being prepared, what is the criteria basis which it is being prepared. So again, again, I'll go back to my typical example of a net worth, where net worth is to be extracted, but from where it is to be extracted? It is to be extracted from the trial balance. It is to be extracted from the unaudited financial statements, right? It has to be extracted from the audited financial statements, versus there could be a situation where there is a demerger or a merger kind of a scenario, where you might have to issue a certificate saying that the net worth of that particular division is rupees so and so, but whether that information has been verified, whether that information has is something that you could vouch for. Those are the things that should come to your mind in terms of whenever you are doing this kind of an engagement where you are issuing a report or a certificate. Anilji, I'm just checking. I hope I'm audible and things are going fine. Anilji? Yeah, so I got a message that everything is fine. Okay, moving on. Again, once you've decided that you could accept the engagement or you could continue with the engagement, the first step, in the entire life cycle is to really confirm the terms of engagement, agreeing, the terms of the engagement, and it is usually, in writing that you kind of confirm your engagement and the terms of those engagement through a engagement letter or any suitable form, written arrangement, written confirmation, or as may be prescribed in law or regulation applicable whenever to the whatever subject matter you are kind of certifying. So typically in every assurance engagement you would do that. But again, this guidance note again reiterates that, as practitioners, you should be beware of that. You should ensure that there is a written engagement with the engaging party, so that the terms and conditions of the engagement are kind of agreed upon before you kind of start the engagement. The terms of engagement, again, at a minimum, it should include, again, this is prescribed in the guidance note, that the objective and the scope of engagement should be clearly set out in your written communication with the engaging party. So what is the objective? What is the scope of engagement? Again, what is the responsibilities of yourself and the engaging party, right? So what would you do? What would I do? What is my responsibility? What is your responsibility? I think those things should be clearly set out in your engagement letter, which you kind of sign with the engaging party. Identification of a suitable criteria, again, for example, again, I'll go back to a very simple example of net worth where we have to certify net worth, right? So subject matter is net worth, but what is the criteria? What is the suitable criteria? Last audited financial statement. Again, those things should really be included in your engagement letter, so that there is no ambiguity in terms of what you are thinking is your scope of engagement versus what your engaging party is thinking as a scope of engagement. So I think that clearly should be written and documented in your engagement letter. Otherwise, again, the objective of the engagement will not be met, and obviously it will lead to a lot of conflicts when we kind of conclude the engagement and hand over our report to the engaging party. Identification of the subject matter, including reference to the laws and regulations or the contracts. Again, identifying the subject matter, which is, for example, in my case, would be net worth, and reference to the law or regulation is something where, why is it required, for what purpose it is required, whether it is required by law, whether it is required by contract, whether it is required for a particular tendering document. Those things should be included in the terms of engagement, so that again, those that the report that you issue under that engagement is not kind of used for any other purpose. So that particular aspect should be brought into your engagement letter. And of course, the most important one, unrestricted access to records and documentation, because if that's restricted, then it could lead to scope limitations at the end of the day. And the fact that it was not written in the terms of the engagement would mean that the engagement party could come back and say that you never asked for it. So unrestricted access to the information and documentation, because you need to get the access, as well as that should be available for your documentation as well, because you could access those records, but if you cannot document that, again, uh, procedures and ultimately your conclusion would be challenged, because that's the cardinal rule of our auditing profession, that not documented is not done. So these are some of the things that you should bear in mind in whenever you have decided that you would want to accept that engagement, continue with that engagement. Your engagement letter should contain minimum of these items in your engagement letter in detail. There are other also. I would again recommend you to go back and kind of read the guidance note, so that you will be able to make a more comprehensive engagement letter with your client. So next step, again, as any other assurance engagement, the next steps is, once you have decided that you want to go ahead with an engagement, you've entered into an agreement or an engagement letter with the engaging entity, the next step is obviously, to plan it in an effective manner so that you can achieve the objectives of a particular engagement. Now, typically, as you do in any other engagement, you need to ensure that you are setting the scope right, in terms of what you want to do, how do you want to do. You are timing your engagement well as to when you want to do those procedures, whether you want to do after the year end, whether you want to do it before the year end, considering the timelines of the engagement. So, you may have to give a certificate or a report, immediately after the year end on a particular subject matter. So you might want to do some procedures, before the year end, so that you only have to do, roll forward procedures, or top up procedures to conclude on your engagement. So I think timing and direction is very important, because typically, if you have to give a certificate very near to a cutoff date, it may be difficult for you to perform all the procedures and reach to a level of assurance that you would want to. So I think that's very important. Again, determining the nature, timing, and extent of the planned procedures, what you want to test, how much you want to test, when do you want to test it, the sample size, whether you want to do test of controls, whether you want to do substantive procedures to really conclude on the assurance that you kind of want to provide and agreed with the engaging party. Lastly, based on your scope, timing, direction, nature, timing, extent of procedures, you take a combined view, whether by doing that you are able to meet the objectives of that engagement, right? Whether you'll be able to issue a report which is required under the law, under the contract, by the regulator, or those charged with governance, the board, right? So you kind of make a holistic evaluation of what you've planned, right? And see whether those planned procedures are adequate enough to give you that level of assurance that you kind of want to provide in your certificate or report. So it could be a reasonable or a limited assurance. And again, as any other audit engagement, very important that you kind of maintain your professional skepticism throughout the engagement. So be it planning, be it execution, be it concluding. So whatever you do, I think professional skepticism is something which is inherent to yourself whenever you are doing any and every assurance engagement. Moving on, as we discussed, in first few slides, whether you can use the concept of materiality whenever you are doing assurance engagement under the guidance note. The answer is of course yes, but again, the problem is that it is a matter of professional judgment as to what should be the materiality. So again, guidance note can only give you principles around which you should think what is material and what is not, but then it always leaves it to the professional judgment of the practitioner to decide as to what is material and what is not. And obviously it is affected by the perception of the common information needs of the intended users of the group. So the user group is the parties who will be using your report or certificate, and what is their need that would typically help you determine the materiality levels. Again, as usual, misstatements are considered to be material if individually or in aggregate could reasonably expected to influence the relevant decision of the intended users, right? So it's a typically same kind of definition of material, right? Which is basically meaning that individually or in aggregate, one error or combined with other errors, whether that can influence the decisions of the intended users. So I think that's the principle, but again, all left to our judgment as to how do we kind of determine what is the level of materiality that we should be working on when we are working on this kind of an engagement. Again, whenever we are deciding, upon materiality, guidance note also kind of helps you, to determine the materialities in terms of, giving you a mindset as to what you could assume whenever you are assuming about the intended users. So it says that, again, you could assume that they have a reasonable knowledge of the underlying subject matter, and they shall do a proper diligence whenever that subject matter or information is provided to them. So that's something you could kind of assume before you tend to finalize your materiality levels. So you could also assume that they have a fair understanding of the materiality concept. They also understand there are inherent uncertainties involved, obviously in relation to the procedures that you could do to reach a particular conclusion. And also, they're able to make a reasonable decision basis the subject matter information taken as a whole, and not only on the basis of the certificate that you are kind of issuing. So these are some of the things you could kind of assume. But obviously, whenever you are issuing a certificate or a report, there are a lot of things that you should include in your report or certificate. So if you believe that there are certain inherent limitations, while performing the procedures, it is always good to kind of bring out in your report that you're kind of issuing, right? So that's very important that you understand. You could assume, but then it is very important that you also bring out the relevant information or relevant procedures, and if at all there are inherent limitations, those should also be brought out in a typical report or certificate that is issued under this guidance note. So again, I'll keep on going back to a very simple example of net worth, right? So one way of doing it is saying that to whomsoever it may concern, the net worth of the company is this much, and you kind of sign off. But the guidance note really doesn't prescribe that kind of reporting, right? So the guidance note really prescribes that uh, there's a lot of information that should be there in the report, right? It can't be just one liner report that you kind of issue to anybody. So it has to have a lot of contents, and those contents are also part of this guidance note as to what are the minimum contents that should be there in a certificate or report. And we'll kind of discuss that in subsequent slides as well. Again, talking about materiality, if you really see, whether whenever you are doing a reasonable assurance certificate or limited assurance certificate, can you reduce your materiality? The answer is no, because the materiality is based on information needs of the intended users, while the level of assurance is only the basis that what procedures are you able to do, and whether you are able to kind of mitigate or reduce your risk to an acceptably low level, and what are the type of data, underlying records that were available to you to kind of draw a conclusion or an opinion in the form of limited or a reasonable assurance. But as far as materiality is concerned, materiality doesn't change, because whatever procedures you have to do. But it is only the fact that whether you were, by doing those procedures, whether you were able to reduce your risk to a acceptably low level for you to provide a reasonable or limited assurance. So materiality doesn't change in both the scenarios, but of course, basis the procedures and the level of comfort that you kind of draw from your procedures is what makes you decide whether you can give a assurance which is a reasonable or a limited one. Again, as I keep on saying, materiality as a concept, and we are pretty aware of it, that materiality is more in terms of the guidance. It's more principle based rather than specific or rule based in that sense. So there are various qualitative factors. I have illustrated some of them, which are I thought were key. There are many other in the guidance note. You could again go back and read through those qualitative factors. So one of them is the people who are affected by the subject matter, the people who would be using that certificate, whether there are various regulators. If there are various regulators, then they might interpret the information in a very different manner whenever they are seeing those certificates. So who are those people, and the number of people who will be getting those copies of those certificates? Again, materiality would depend on whether the misstatement affects compliance of the laws and regulation. So in terms of amount, it may be very small one, but then if it actually does not, or is in violation of a particular law and regulation, and you are giving a certificate which says that you have complied with that particular law or regulation. So amount may be small, but then it leads to your conclusion saying that the law and regulation has not been complied with. So that's the qualitative aspect of it rather than numerical aspect of it. Again, whether misstatement was intentional or unintentional. So again, intentional acts may lead you to believe that whether something fraudulent is happening, right? And amount that you kind of see, whether it may be small, but then whether it was intentional or unintentional is something, numerically it may be small, but if it is intentional, then your conclusions may change significantly, because that is where you smell that something fraudulent may be happening. So I think again, that's another qualitative aspects when you kind of determine your materiality. On quantitative aspects, again, it is obviously expressed numerically, right, in terms of numbers, or it could be, related to a numerical values. For example, you kind of testing controls, right? So out of 25, you may say that only two times the control did not work. But then if your test of 25 is not accurate, then it is impossible, or it may not be possible for you to kind of rely on that particular information, because your test of controls have failed. So again, numerical but quantitative, but again qualitative aspect also embedded into that aspect, that if the control is not working properly, then you might want to switch to your substantive procedures, increase your sample size, and then really decide whether you can express a clean opinion, whether it is reasonable or a limited one. So again, both qualitative, quantitative, principle based, and requires a lot of professional judgment whenever you are deciding on materiality while performing any procedures, and that's goes without saying that it is applicable to each and every assurance engagement that we kind of do. Moving on, procedures. As we all know, there are two types of procedures: test of controls and substantive procedures, right? Again, just a reiteration of what we kind of already maybe know, is relating to test of controls includes inspection, observations, reperformance, or combination with inquiry to obtain appropriate evidence as to how the control was applied, the consistency with which it was applied, and by whom it was applied. So how the control was applied is something which relates to the fact that whether it was applied in a manner that suffice your purpose as well, right? So control may be there, but the way it has been applied, it may not be applicable in your particular scenario, right? So if that control is not there, you may not be able to rely on that control. The consistency means that whether it is applied to all the transactions, or it may not be applicable to all the transaction. It may be applicable to certain transactions which are above a threshold. Then again, you might want to do maybe extended procedures to make sure that transaction below that thresholds are also correct, right? So because the control has not been applied on those particular type of transactions. By whom, again, it means that whether people who are executing those controls or making sure that the controls are working properly, those are competent enough, right? And whether they have relevant experience and competencies to make sure that they are able to test those controls before you kind of rely on them. The other aspect is, there could be situations where that the controls that you kind of test depend on other controls. A typical example is in a SAP environment, right? ERP environment, where the controls are dependent on the IT general controls of SAP, of that entity, right? An example that I could think of was, for example, you are required to kind of report or certify, so let's say the aging of the debtors, right? Aging of the receivables. And there is a report that comes from an ERP saying that this is the aging, and you kind of trace it, saying that I've traced these aging balances from XYZ report. But really, if those IT general controls are not effective or those have not been tested, so how do you really rely on that report, before you kind of make a conclusion that it is accurate or it is correct, or it is reasonable or it is not reasonable? So that is where, an important aspect also comes in, that whenever you are testing controls, whenever you are doing procedures which are dependent on particularly IT systems, whether you have obtained, evidences, or whether you have ensured that evidence is there to support the operating effectiveness of those other controls, right? Not your control, the control that you are testing, but the controls on which the control being tested is dependent upon. So that's again very important, whenever you are doing procedures, whenever you are doing or relying on IT general controls that are automated in the system. So you may want to believe that, controls are maybe working fine, but if those are not tested, it will be really difficult for you to rely on those controls, right? Similarly, you move on to, after doing your test of controls, you move on to your substantive procedures, which again includes more detailed testing, transactions, or maybe say a particular materiality threshold that you want to test. It would include inquiry, inspection, observations, confirmations, recalculations, reperformance of the underlying subject matter, right? On which you are kind of certifying. But again, please remember, whenever you are doing those substantive procedures as well, and those are also dependent on certain other aspects, particularly, they are coming out of an ERP. And the example that I took, for example, you are relying on an aging report of receivables that is coming out of an ERP, whether whether the IT controls or the automated controls, and the fact that, aging is accurately calculated by the system. There has not been any manual intervention during the year, in the IT system, to kind of make changes in the way the aging is being calculated throughout the year. I think those are the things you really need to test and make sure that whenever you are relying on those items, informations which are coming out of an ERP, those IT general controls, as well as, the automated application controls, are also tested. If not, you are performing, additional procedures to make sure, that aging is computed correctly. So again, I can give you an example. Aging can be calculated from the invoice date. Aging can be calculated from due date, right? So during the year, it is possible that, the IT general controls may have been changed to meet a particular requirement, and aging to to some extent, to a limited period was calculated from due date, whereas subsequently it was changed from a due date to invoice date. Now your reliance on that particular aging report will undergo a significant change as to what is that you are trying to certify, right? Because the aging that you certify basis the invoice date and basis the due date, it will all change, right? So make sure that you are kind of, whenever you are obtaining those relevant data, informations, and that is automatically being calculated by ERPs. You make sure that you are doing adequate procedures, either to test those IT controls, or make sure that you perform, additional procedures to make sure that the information that you are relying upon is accurate for the particular purpose. Again, the next part of another aspect of substantive procedure is also, analytical procedures. So again, you need to decide what all analytical procedures would be relevant for your subject matter. But whenever you're doing that, just make sure that, you are developing expectation, right? So it should not be like, for example, one could say that there is no movement in account balance from period X to period Y, so everything is okay. But then, if you would have developed an expectation, you would have believed, or you would have wanted that number to have changed by, X percentage. But if that's not changing, even that is something that should be a cause of concern, and appropriate procedures should have been done to see as to why that number has not changed by that X percentage. So before you delve into any type of analytical procedures, the important aspect is that you kind of develop an expectation as to how that number should have moved, be it ratio or be it in terms of numerical value. And also make sure that whenever you are basing those expectations, developing those expectations, you make sure that the data that you are using to develop those expectations is kind of reliable and relevant and comparable, right? So it could be a possible situation where X ratio was calculated in previous year by a particular formula, or by taking XYZ items, right? But in the current year, probably due to some change in law, some change of regulations, some change of whatever reasons, that formula has been changed, or some item used to calculate that ratio has been excluded or included in the current period. That data may not be comparable, right, in terms of when, and you may develop a wrong expectation, or get a wrong conclusion as to whether those ratios are correct or incorrect whenever you are doing those analytical procedures. Some other examples, again, you might want to, if subject matter requires you to do that, conduct site visits for significant locations, comparing the reported subject matter information to the underlying records, testing that A has been accurately extracted from the underlying financial books, right? So that's one of the procedures that we kind of do. Performing test of significant analysis or reconciliation. For example, you want to maybe report on the turnover of the company, and one of the procedures that you want to do is probably compare the GL with the subledger, right, or a sales ledger. But there could be differences between the two. So whether you have appropriately kind of seen what are those differences, whether you reconcile them, whether you have tested those reconciliations, whether those are appropriate, and before you kind of certify that turnover of the company is X, this is the sales ledger or the GL general ledger, those items are verified, those reconciliations are verified and ensured that those were relevant and should have been there. So that's pretty much about the procedures that you want to perform. Again, it is similar to any other assurance engagements, right? But here it may differ a little bit in the context of a particular subject matter that you kind of certifying, right? So in a financial statement scenario, you may be doing general procedures on overall account balances. But here, when you are certifying certain information, you may be certifying information to a very limited extent, or a small part of that large account balance, right? So that is where all these procedures come into picture and play, as while you are certifying a particular small aspect of a large account balance, you're making sure that you're not relying only on the past procedures that you may have performed. You might want to do additional procedures before you kind of reach to a conclusion, and that would again include similar procedures, test of control, substantive procedures, analytical procedures, but then it would require more specific attention on that particular subject matter, and procedures directed to ensure that the number, that the small aspect of the large account balance is accurately presented, and whatever you're certifying is kind of reasonable in that sense. Right, once your procedures are done, again, what you do is you also obtain written representations. So guidance note clearly mandates practitioners to obtain written representations from the appropriate party or parties, right? And it should contain these two aspects very clearly, that the practitioner has been provided with all the information by the appropriate parties, and which they are aware of, and is relevant to this engagement. And second is confirming the measurement or evaluation of the underlying subject matter against the applicable criteria. So you just make sure that that management is also with you in terms of owning what they're kind of presenting to you, giving to you in terms of the information and the underlying records, and you make sure that you take appropriate representations, that they have at least performed their duties in terms of the engagement letter that you have signed with them, as well as the responsibilities that they were required to perform under a specific law or regulation under which you are providing a certificate to the management. I think those type of representations should be clearly written, documented in your files, and that confirms that the management has performed their duties, which are relevant to them. Moving on, other information, that's again a new concept that has come over a period of time, and as the any other audit assurance engagements, auditors are required to review that other information that is accompanying the say the financial statements, just like director's report, the board report, etc., etc., and make sure that there is no inconsistency in the information that is there in the say financial statements and the information that is being reported by the management in other various documents that are accompanying the financial statements. And similarly here also, the guidance notes again prescribe mandates the practitioner to really identify and see what are the other informations, right, which are being accompanied with the auditor's report or a certificate that you are issuing, and just make sure that you read those information, right, and make sure that there is no material inconsistency in what you have been told while you were doing the engagement, while there may be instances where the other information contains the similar information in a very different manner and is being submitted to the users of the certificate or the users of that particular subject matter. So again, your responsibility is to ensure that there is no material inconsistency between that in other information and the information in your assurance report. And if at all you become aware of material misstatement in any other information that is being accompanied, and that is unrelated to matters appearing in the subject matter information or assurance report, then obviously you should discuss the matter with the appropriate parties, and obviously you need to take and further appropriate action as may be required. So that those actions would again depend on your professional judgment as to what you want to do. But obviously, if there is a material inconsistency, if that affects the opinion that you have issued or assurance that you have provided, I think it is important that you take appropriate steps, discuss with the entity, organization, make sure that the information going to the users is consistent with the information that is provided to you, and otherwise as well. So that's one thing one could miss while doing a certification or issuing a report or a certificate, that it is also a practitioner responsibility to review that other information as well and see if there is any material inconsistency in whatever you are doing. Finally, once you've understood the objectives of the engagement, you have decided that you want to continue with the engagement. Thereafter, you have entered into a written engagement letter with the client. You've planned what you want to do, right? And thereafter, you perform those procedures, right, as you have planned. Now, based on those procedures, now is the time that you kind of form an opinion or a conclusion, and that obviously depend on your evaluation of sufficiency and appropriateness of the evidence obtained through the procedures that you had planned to do to opine on this certificate. Again, as any other assurance engagement, you would have various forms of you know opinions that you could issue. Obviously, one is the unmodified opinion, which is unmodified opinion or conclusion, which typically is allowed only under the guidance note, saying that you would issue a reasonable assurance or a limited assurance, right? Again, reiterating reasonable assurance is more positive, saying that entity has complied with the applicable criteria, while limited assurance says that nothing causes you to believe that the information has not been provided or prepared in all material respects in accordance with that applicable criteria. So these two type of unmodified opinions or conclusions are allowed for any practitioner to issue. But obviously, in adverse situations, right, where a particular information is not as per the applicable criteria, obviously you'll have to issue a qualified opinion. Obviously, when you issue a qualified opinion or conclusion, is only when effects or possible effects of the matter are not material and pervasive, which means that it affects only one aspect or one aspect of the certificate that you are issuing. So you issue a qualified opinion saying that this aspect does not meet the requirement of the certificate or the objective of that particular purpose for which it is being issued. Next is again adverse opinion, where effects or possible effects of the matter are material and pervasive, which means that that particular item or misstatement in that item is so material, and it affects or it kind of dilutes the entire purpose of the certificate. You issue a adverse opinion. And whenever there are scope limitations, you're not able to perform the relevant procedures that you are required to kind of perform and complete, you obviously issue a disclaimer of opinion oblique conclusion. So again, you would see that for each type of opinion that you issue, it says modified opinion oblique conclusion. So opinion means reasonable assurance, whereas conclusion means limited assurance. So even if you are issuing a limited assurance or a conclusion, which is a limited assurance, you could still have a qualified conclusion or an adverse conclusion or a disclaimer of conclusion. Now, coming to what guidance note requires you to have as minimum in your auditor's report is also prescribed in very great detail in the guidance note. You could refer para 80 of the guidance note, which clearly states that these are the minimum level of items, minimum items in your report that should be there. So a report saying to whomsoever it may concern, the net worth of the company is so much. That's something which is not permissible under this guidance note. And this guidance note clearly states that whenever you are issuing a certificate or a report, you should have these minimum items in your report. So first thing is the title, that clearly indicates that it is an independent assurance report. So you start by saying independent assurance report on net worth of the company for the year so and so. So it should clearly identify that it is an independent assurance report. It should have an addressee, so it can't be to whomsoever it may concern. It has to be to say the board of directors, to the particular engaging party. So it can't be a general report that you could issue to to whomsoever it may concern. Third one is an identification or description of the level of assurance obtained by the practitioner. So as we have been speaking through this presentation, that there are two types of assurances that you can draw. One is limited and the other one is assurance, right? Reasonable assurance. So that fact should be clearly brought out in your audit report or in your report or certificate, that you have been able to obtain a limited assurance or you have been able to obtain a reasonable assurance, and that should be very clearly mentioned in this certificate at a couple of places, and we'll kind of discuss a few places where it is required to be mentioned. Identification of applicable criteria. For example, you are saying that net worth is to be certified, but the applicable criteria is say the audited financial statements. So the subject matter as well as The applicable criteria basis which you are concluding on that subject matter should be clearly mentioned in the report. It can't be a blanket one. Wherever appropriate, a description of significant inherent limitations should also be mentioned in your audit report. So for example, you are doing a net worth kind of a certificate or a turnover kind of a certificate where the information is arising out of the unaudited financial statements, right? You could consider mentioning that it is from it, that the information is coming out of the unaudited financial statements, and the only procedures that you kind of done is ensure that the numbers have been accurately extracted from the unaudited financial statements, and no other independent procedures is done to ensure that the net worth has been accurately computed. So you've only seen the extraction process and not audited the underlying information. So those inherent limitations, if at all they are there, those should be clearly brought out so that a reader of that report is able to understand the basis of your conclusion. When the applicable criteria are designed for a specific purpose, a statement alerting the readers to this fact should be there. So it typically means that when you are issuing a certificate for a particular specific purpose, your report should clearly alert the reader of that certificate that it has been issued for a particular purpose, and it cannot be used for any other general purpose, right? So for example, if you are issuing a certificate for a tender of XYZ authority, so you kind of mention in your certificate that this certificate has been issued only for the purpose of that XYZ authority, so that it cannot be used, or the reader should not consider it as a general purpose certificate and use it wherever they want to use it, right? So that fact that it has been issued for a specific purpose should be very clearly mentioned and required to alert the reader of the certificate. So it typically you would include a restriction of use kind of a paragraph in your certificate stating that it has been issued for XYZ purpose and should not be used for any other purpose. So that particular statement clearly comes out in your report or certificate. The next one is again relating to responsibilities. That again should be clearly brought out in the certificate or report, saying that these were the management responsibilities. So for example, management is responsible for preparing the information and underlying information which is being provided to the practitioner, while practitioner these are the responsibilities of practitioner. That practitioner was supposed to ensure that the information has been accurately extracted from the audited financial statements of the company. So I think those responsibilities should clearly come out in your report or certificate, and that's again mandate. It's not an option, right? So you have to make sure that it happens. The next one is a statement that the engagement was performed in accordance with guidance note. How it comes, we'll just see in one of the subsequent slide, but that statement should be there, that this engagement or this report has been issued in accordance with the guidance note of the institute. The other important aspect that should be there again in the assurance report is that you have complied with SQC1, which is Standards on Quality Control 1, which every firm has to follow. A statement that practitioner complies with the independence and other ethical requirements of and the code of ethics of ICI. That statement has to be there. So it's not assumed. It is a statement that you need to make in your report and certificate. The next one is the informative summary of work performance. So you need to include the procedures that you have performed in summary, obviously, not in detail, but in summary that these are the 5 procedures that you have performed to reach to a conclusion that the information presented by the management or the information in the certificate is reasonably okay or limitedly okay, whatever conclusion you're kind of drawing. Particularly in a limited assurance engagement, right? The summary of work performed should clearly state in your certificate, and that's again not an option. It's a mandate in the guidance note, you need to clearly mention that the procedures performed in limited assurance engagement vary in nature and timing from and are in less than the reasonable assurance engagement. So you clearly write that, make sure that it is written in your certificate so that the user of the certificate is well aware that it's a limited assurance engagement, and the timing and nature of procedures that have been performed or the evidence has been obtained is obviously less than any other reasonable assurance engagement. And you again conclude by saying that consequently the level of assurance obtained in a limited assurance engagement is substantially lower than an assurance that would have been obtained had a reasonable assurance engagement been performed. So these two statements have to be there in your your certificate, right? Whenever you're doing a limited assurance engagement. Apart from that, practitioner's opinion conclusion, which is obviously part of any audit report, and practitioner's signatures, date of assurance report, place of signature, and obviously don't not there in the guidance note, but then UDIN also should be mentioned in the certificate. So these are some of the key aspects of the content of your assurance report, right? Again, these are mandatory. There is no option of excluding them or any one of them. So just make sure that all these aspects are there covered in your report. You could again go back to para 80 of the guidance note. It clearly gives you all list of all items, all statements that should form part of the audit reports or the content of the audit report. So that's very important, because um, everybody or any regulator would want you to kind of issue a blanket certificate, but then the institute and the guidance note really mandates you to include all of this to make sure that the reader of that certificate or report is able to appreciate as to what you've done, how you've done, what is the nature of conclusion that you've kind of drawn, and it is not used as a blanket kind of a scenario or blanket kind of a certificate where everybody can just keep relying on that without informing you. The next aspect, and again one of the challenges that we as practitioners kind of face is there are situations where a particular layout or of the certificate is prescribed by law or a regulator, right? And in those circumstances it becomes a little bit of difficult for us to really kind of ensure that the requirements of para 80 or guidance notes are kind of complied with, and the content of the report includes all those items which are required under the para 80 of the guidance note, right? So once, if at all, the wordings of the assurance report is again prescribed by the law, the wordings are prescribed by the law, right? So you need to make sure that you kind of discuss very clearly with the engaging parties, saying that this is the law, this is the regulation, this is the guidance of the institute, where I need to kind of make sure that all of those contents of the report are included whenever we are issuing a certificate or a report. So I think those are the things you should early on discuss, and you should always, whenever you are discussing and agreeing with the engaging party, you should make sure that the layout or the wording is also documented as part of your engagement letter, so it's not left open as to what type of language, what type of report that you will kind of issue, and what will be the contents of that report. So typically, the guidance note mandates you to include all the information that is there required as per para 80 of the guidance note. Now, if what if the concerned authority, once you've issued a report or certificate that was issued by you, complying with the guidance note and ensuring that all the contents as per para 80 of the guidance note are included in your report, and that is kind of rejected by the concerned authorities. So again, that situation is also envisaged in the guidance note. And what it really asks you to do is that you should obtain evidence of that rejection, first of all, right? You take that evidence of rejection and document as part of your file, saying that, I had issued a certificate, complying with the guidance note or issued by institute, but that's been rejected by the authority through, whatever letter dated so and so. Now, the next step that you could do is that, you could issue assurance report in the format prescribed under the law, right? So you use the prescribed language under the law and issue a certificate, because in doing so, because when you had issued earlier certificate in compliance with the guidance note, you would have complied with the requirement of guidance note while issuing that first certificate, or the certificate you issued in the first instance basis the guidance note. So that's the next step that you kind of do. So you are allowed to issue a certificate as per the law and regulation, prescribed language of law and regulation, provided you would have issued a certificate in compliance with the guidance note, and you also obtain the evidence of rejection and maintain it as part of your files. What you could also do is that while you could use the language or the format of the regulator or the authority, what you could also consider is that you could attach an annexure to that certificate and include those essential elements of the assurance report as per para 80. So you prepare the report or the certificate in the prescribed form, which may be 2-liner or 3-liner form, but together with that you could attach enclose a statement which would contain the other pieces of the guidance note para 80. So that's another option that you could do. And whenever you are doing that, whenever you're issuing another certificate, because it has been rejected by the regulator, you should also make sure that whenever you're issuing, on the same certificate in the prescribed form of or language of the regulator, and you're enclosing a report or a statement saying that all of complying with all the other requirements of the guidance note, just make sure that enclosure or statement clearly states that this is in supersession of the earlier certificate that you would have issued because it was rejected by the concerned authorities. So the fact that you would have issued one certificate, you're issuing another certificate for the same purpose. Whenever you are issuing same certificate for another certificate for the same purpose as per the law and regulation, because it was rejected, please make sure that you write in the enclosure saying that it was rejected, and hence it is in supersession of the earlier certificate, so that earlier certificate kind of is superseded by the new certificate that you are issuing. Just maybe few challenges that I would have faced, while doing these reports and certificates, which I thought I could share, with the larger audience, is whether a certificate can be done for historical information or for a futuristic statement also. So very clearly, it can only be done for historical information, and futuristic information is something, as practitioners, it is not possible for us to predict the future. Financial versus non-financial, again, if historical information is there, financial versus as well as non-financial, a certificate or a report can be issued under this guidance note, but obviously you need to see whether the subject matter is such that it is possible for you to do adequate procedures to really come at conclusion, especially with respect to a non-financial information. And typically, a non-financial, in case of non-financial information which is not coming out of books of accounts, typically, one would consider a limited assurance certificate to be more appropriate. Only if you are satisfied that you could do adequate procedures to reach to a conclusion. The third bullet, I think I've discussed, time and again during my presentation. I think I'll skip that. The fourth one is, seeing the scope of the engagement, and really, sometimes the need or the requirement is kind of satisfied by an AUP engagement as well, which and a certificate or report is not required in that sense. So one should evaluate the scope of engagement, the need of the users, right, and see whether you are required to do an AUP procedures or you need to do a certificate report. I think that's one evaluation that you should make whenever you are accepting an engagement. The other information, other aspect is very important one is that whenever you are making or certifying certain financial information, but the underlying information or the underlying financial statement itself are qualified. So, for example, you are certifying net worth of a company, but the underlying certain elements of assets are kind of qualified by the auditor, saying that the recoverability of XYZ balance is kind of in question mark. So whether how do you kind of bring that aspect as well in your report, because net worth that you are kind of certifying is subject to that qualification which is there in the audited financial statement. I think that is very important that you kind of bring that very clearly in your report, that because net worth may be 100, but it is subject to a particular asset being recoverable or not, which is already qualified by the auditor. So I think that is something which you should make sure that is clearly brought out in your audit report. Apart from that, also need to see, whose responsibility was to attest a particular item. So sometimes, a party is just shifting the responsibility on the practitioner really of something which they need to kind of attest, right? Because then they can conveniently say that, this is the certificate obtained from the practitioner, we also kind of agree with whatever subject matter is. So I think that is also an important aspect. You should also evaluate, right, in terms of the risk that you are taking when you are kind of certifying any information, and see whether it was required, to be certified by the practitioner, or it is more giving comfort to other parties so that they can kind of certify the information basis your certificate itself. So these are some of the challenges that I would have faced in the past, and I thought so again, these are my personal views, in terms of the challenges that I would have typically seen, in my audit journey. Coming on to the last important aspect, and obviously this is one of the most important aspects whenever it comes to mitigating the overall audit risk, is documentation. And as you all know, it is a cardinal rule: not documented is not done. So whatever you are doing, whatever procedures you are doing, whatever conclusions you are reaching, there may be significant matters that you would have discussed with the management, right? And you would have maybe concluded that everything was okay, but sometimes we tend to not document those discussions and conclusions and how they were reached, while finally opining on a certificate. So I think those are the things you should bear in mind, that all the work that you do, all the discussions that you do with the management, significant matters that were discussed within your team, or with the management. Most importantly, any judgments that have been taken, judgments, estimates, those are very clearly documented, and what are the procedures that the practitioner has done to really get comfort over those judgments and estimates before reaching the conclusions. I think those are the things which should be very clearly documented and kept in your files, to ensure that you're able to demonstrate at any point in time as to what you had done and how you would have done it. How would you have kind of done the engagement. As a minimum, as a minimum documentation requirement in the guidance note, you should have an engagement letter. You should make sure that independence procedures are properly documented in your files. Your planning review, who has done it, to what extent somebody has reviewed it. Those all items are documented in your files. The procedures that you have performed, the conclusions of those procedures, letter of representations that you've taken from the management, and finally the conclusion and the final report that you've issued. These should be part of your files whenever you are closing out on any engagement. Work paper usually should not include any draft documents that you would have exchanged, draft work papers, any review comments, because it is expected that all review comments should have been disposed of. Any to-do notes, because again, you would be expected that all to-dos have been completed before you have kind of issued the final report. Any work paper schedules that you would have received from the client and they were superseded later by a different set of documents or information, those again should not be part of your work papers, because you should maintain only the final ones, final work papers in your files. Just a sample report again, it is available in the guidance note as well, but just to reiterate whatever we have discussed. So if you really see the first item, it says the board of directors, which is basically saying that the report should be addressed to someone. It should have an addressee, and that's again a mandatory requirement of para 80 of the guidance note. The second piece, if you really see, is the independent practitioners report. So again, para 80 says that it should clearly identify, saying that it is an independent assurance report. So that's again the second thing that is there. If you see para 1, it says the engagement was done as per the engagement letter, right? So again, guidance note mandates you to have engagement letter, and the report should contain the reference of that engagement letter. Para 2 contains the subject matter, right? That what you need to do, that there is an annual turnover or net worth or working capital. That is something which you need to certify. Para 3, if you really see, again, talks about the management responsibility. So as we discussed in the previous slides, the management responsibility and the practitioner's responsibility should be clearly brought out in your report. So this para 3 and 4, if you really see, it says that preparation of the document that practitioner is supposed to certify is the responsibility of the management in terms of the controls, in terms of whatever is required to make sure that those information is accurate, is something which the management has to do. Apart from that, there could be many other provisions of a tender document or a contract or a law or regulation. So again, it clearly says that practitioner responsibility was only restricted to verification of the statement, and any other requirement of that law, regulation, etc., etc., it is the responsibility of the management. So practitioner is not responsible for that. It is the management who is responsible for that. Now, if you really see the practitioner responsibility, it very clearly states out that what is to be done and how it is to be done, right? So the amounts of statement of annual turnover for the year ended XYZ have been accurately extracted from the audited financial statement. It very clearly says that practitioner was only supposed to make sure that the annual turnover stated in the certificate has been accurately extracted from the audited financial statements of the company. So you're not certifying the annual turnover, you are certifying that it has been accurately extracted from the audited financial statement. So that's the big difference in terms of understanding. One could get as a reader of the certificate if you only certify saying that the annual turnover of the company is rupees this much, right? So it would mean that you would have, it could mean, not it would mean, but it could mean that you have you are certifying the turnover of the company, whereas you are not. You're only saying that turnover has been accurately extracted from the audited financial statements. Moving on, para 6, if you really see it, it says that whatever information has been verified is coming out of an audit opinion, which was an unmodified opinion issued by you as per the standards on auditing and other guidelines of institute, right? So that's pretty much saying that the information that is coming out is from these financial statement on which there was an unmodified opinion. Para 7 and 8, if you really see, again, we discussed in the previous slides that it clearly mentions that, you have complied with the independence rules or code of ethics of the institute. Plus, you have also complied with SQC1 requirements. So these are mandatory kind of statements that you are required to make in your auditor's report or a certificate. Finally, we come down to the opinion, which says that based on our examination, we are of the opinion that the amounts of annual turnover, etc., have been accurately extracted from the audited financial statements. So that's a positive or a reasonable assurance kind of a scenario where you are saying that, it is accurately extracted from the audited financial statements. Whereas in a limited assurance, you would have said, nothing causes us to believe that, this information has not been accurately extracted from the audited financial statements. So that's the difference between reasonable and limited assurance. And finally, as I told you, restriction of use, which is basically alerting the reader of the certificate saying that, it has been issued for a specific purpose and should not be used for any other purpose. And if at all it is used for any other purpose by, somebody, we as practitioners or I as practitioner do not accept that responsibility. If you do that without informing me or without my prior consent in writing. So that's the restriction of use that comes in. Again, the rest is all typical in terms of the firm name, the name of the chartered accountant, the firm's registration number, signature, UDIN, designation, place of signature, and date. So all these are mandated by the para 80 of the guidance note, which is very important. And please make sure that whichever certificate you issue, whenever a certificate you are issuing, you make sure that all those items of that paragraph, para 80 of the guidance note are included in your assurance report. So Anilji, I think this is it from my side. I'm happy to take up any questions that would have come.
Thank you so much, sir. Can you hear me?
Yes, absolutely. I can hear you, sir.
Thank you so much, sir, for such a detailed and wonderful deliberation on this topic, covering the guidance note also. You have covered a lot, almost everything in your deliberation. And enthusiastically, members have raised so many queries. So I am asking one by one. First question is.
So Anilji, I can't see you, but.
Just a moment, sir. Yeah, it's on. I think camera is on, sir.
But sir, you are not visible, so.
I got some technical issue. Can you use the TV? Camera is not on. Now it's visible?
Absolutely, sir.
Okay.
Welcome back.
So my first question is, any precautions while issuing net worth certificate for visa embassy for study visa to Canada, UK, etc.? Any limitation clause should be included in the report?
So it will all depend on the circumstances of the case. Again, as I discussed, that you need to make sure that what you're certifying is properly documented, properly, all the procedures are there in your audit report. And another typically, if the financial statements, underlying financial statements are itself qualified, those are the type of scenarios that or challenges that one should consider while issuing a net worth certificate, right? And one should understand, the fact that if it is issued for any regulator or for any other purpose outside of India, right? One could also ensure that, mentioning that, how those financial statements were prepared, because obviously those are not compliant with the gap of those countries. So I think that's one. And you could also consider including a definition of net worth in terms of what you've included in net worth, because there could be revaluation of assets kind of a scenario where the outside country regulator would like to actually exclude that. So you could always first actually read those regulations under which those certificates are being issued, right? Understand the objective of those certificates, right? And then make sure that appropriate disclosures are made in the certificate, as well as the statement that the management is preparing to ensure that it serves the purpose of that particular regulator.
So what is the outcome of certificate is issued without generating the UDIN by mistake?
Sir, though it is not covered under the guidance note, it was more of a general practice that has been prescribed by institute. So guidance note does not guidance note when guidance note was issued. So that time, UDIN requirement was not there. But I think institute clearly mandates each and every practitioner to kind of make sure that UDIN is generated for each and every assurance this thing.
Sir, we issue a turnover certificate for tender purposes. We regard it as certificate for special purposes.
Yes, so usually whenever you are issuing certificates for tenders, it is usually an assurance engagement. So again, I would again keep on saying, it all depends on the circumstances of the case. But in general, whatever I have seen is that for tenders, normally a certificate is issued under this guidance note, and I would again recommend that the requirements of this guidance note are complied with, and the content of the report should include all those items which are required under para 80 of the guidance note.
So another question is, Government India utilization certificates for grants to sports federations are required in the letterhead of the sports federation. Can you please elaborate or put some light whether a practitioner can at least in the letterhead of sports federation?
So, Anilji, I think as I discussed, in one of my slides, that whenever you are doing an assurance engagement, usually you would issue a report in your own letterhead, right? But again, this scenario is not envisaged. But if I draw an analogy from what is written in the guidance note, it clearly says that you need to perform your duties as per your guidance note, right? If by doing so, your certificate or your report is kind of rejected by the regulator, right? So you could issue a certificate in the form and manner prescribed by that law, by that regulator or by that law. But then you just make sure that that evidence of that rejection is available with you, right? Also, whenever you are doing that, make sure that you kind of make an enclosure or an annexure which contains all the requirements of para 80, for example, the title, etc., etc. And again, you could mention in that enclosure, that this report is issued in supersession of the report issued dated on such and such date, as the regulator would have rejected that. So again, those aspects can be brought out, and I'm just drawing an analogy because I have not usually seen certificates being issued on the letterhead of the other party, because typically it would be not possible for me to sign off or as an individual as well, leave alone as a chartered accountant, to sign on somebody else's letterhead, because I'm not authorized to do that. I think
So can certification be done by other professionals who are not statutory auditors?
yes, absolutely, Anilji, it is possible for other professionals also to do certification work, except where the law or the regulator or the tendering authority would have specifically written that it has to be done by a statute auditor. So all other certificates can be done by any practitioner in that sense.
Sir, can a chartered accountant certify balance sheet which is submitted to the income tax department along with the income tax return? If yes, what remark he has to mark on the balance sheet?
So Anilji, in this particular scenario, usually balance sheet is already signed, for statute, and this is that only you kind of the company typically prepare return and file it with the authorities, tax authorities. The only scenario where I could think of this situation is, I think it's more saying that tax audit is not applicable on that entity, and therefore financial statements are also not required. For a company it would be required. It is only for maybe a partnership firm that you may not need a financial statement in that sense, from required by the law. But if you're doing so, I think it is more the auditing standards that would apply rather than this guidance note. So you have to issue a report as per the auditing standards rather than so it's not a certificate. It's an assurance engagement, audit engagement, which is covered by other auditing standards. And this guidance note particularly does not cover audit and reviews of the financial statements, historical financial information.
So in case of banks, bank generally want net worth certificate from their individual form. Individual form required to be filled in case of fresh loan or renewal. Shall we certify that form also?
Sorry, Anilji, can you repeat the question?
In case of banks, bank want net worth certificate on their individual forms required to be filled in case of the fresh loan or renewal. So shall chartered accountant certify on those bank forms?
So usually again, sir, typically I would, again drawing analogy from the same thing that, I need to make sure that I comply with the guidance note issued by ICI, right? First thing is that, one should make sure that, bank really needs it from the auditors, because, it sometimes happens that it is not mandated by the banker, but it's more management saying that if you could give us a certificate, it will be easy for us to kind of navigate through with the bankers. So please obtain that evidence that bankers are asking for it. You need to negotiate with the management and typically with the bankers, saying that this is the form and nature of certificate that we as practitioners can issue under the framework, right? And which is a mandatory framework. I think those negotiations can clearly happen between the bankers and the managements, right? And we could explain it to management as to what we can do, what we cannot do. But having said that, again, once we do that, once we issue our certificate and that's kind of not acceptable to the bankers and they reject it, we again go back to the same analogy, saying that we kind of document that rejection and then do what is prescribed under the law or regulation, and then also make sure that we kind of say that it is in supersession of the certificate that we had earlier issued.
The last question of the day: whether a certificate is issued but later it is revised, so do we need to take a new UDIN number?
Yes, because again, I mean, again, it's not a question relating to this guidance note, frankly.
Yes.
But again, I can only present my views, my personal views. Again, we will have to check it with the relevant people in the institute. But I think, in my view, it should be required to be a revised certificate would need a new UDIN number.
Last question I have received one at this moment. At the request of the client, can we issue a report or certificate directly addressing to the user of the certificate or report?
Usually not, because normally you're engaging party, because you would do an engagement letter, right? You would do an engagement letter with the company only. So usually you address your report as well to the company. But again, as I said, going by that analogy, but again, this situation is not covered in the guidance note. But going by that analogy, if you issue a certificate to the company or the board of directors, and that's kind of rejected by the authorities, saying that you need to come back to us with the certificate in the prescribed form and manner as well. I think you continue with that same process as we discussed.
So thank you so much, sir. It was wonderful to have you here on 109 program organized by WSP of ICI. It was a really detailed and wonderful deliberation. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, I extend my heartiest thanks towards you for sparing your valuable time. Thank you so much, sir. Thank you so much for a wonderful dedication.
Thank you so much, sir.
Thank you.
Thank you.